Assumptions can cost you everything: unspoken risks and property and casualty insurance. Number 1. Auto insurance assumptions. State minimums are enough. Many assume state minimum liability limits will cover them after an accident. In reality, these limits rarely cover medical bills, vehicle damage, or lawsuits, leaving personal assets exposed. Business use is covered by personal auto insurance. Using a personal vehicle for business, like hauling equipment or materials, often voids coverage without commercial auto policy. Rental cars are automatically covered. Assuming your personal policy extends to rental vehicles can leave you paying out of pocket if there's a claim. Uninsured, underinsured motorist coverage isn't necessary. Declining this coverage puts you at risk if the at-fault driver has little or no insurance. Number 2. Property insurance assumptions. Replacement cost equals market value. Many believe their policy will cover the full cost to rebuild. In reality, market value and construction costs differ significantly. Home-based business equipment is covered. Running a small business from home doesn't mean your homeowner's policy covers business-related equipment or inventory. Flood and earthquake damage is included. Standard policies exclude flood and earthquake damage, leaving property owners exposed to significant losses. Vacant properties are covered. If a building is unoccupied for more than 30 to 60 days, standard policies may not cover damages. Number 3. Liability insurance assumptions. General liability covers everything. This doesn't cover professional mistakes, employee injuries, or contractual disputes. Each risk requires specific policies. Umbrella policies are only for the wealthy. In reality, they provide affordable, broad protection for anyone with assets to protect. Liability ends when the job does. Contractors often believe their liability ends once work is completed, but claims can arise years later without completed operations coverage. Additional insured status means full protection. Subcontractors listed as additional insured may still face uncovered claims without their own liability policy. Number 4. Workers' compensation assumptions. Independent contractors don't need coverage. Misclassification of workers can result in lawsuits, fines, and uncovered injuries. Only on-site injuries are covered. Workers' compensation can extend to injuries that happen off-site while performing work-related tasks. Sole proprietors don't need it. Business owners often skip coverage for themselves, risking medical bills and lost income if injured on the job. Number 5. Commercial property assumptions, especially for construction and farming. Builder's risk insurance is optional. Without it, damage to a project under construction isn't covered. Farm equipment is covered under property insurance. Specialized machinery often requires separate endorsements. Crop insurance covers everything. Crop insurance typically only covers specific perils, leaving gaps in assumptions if made. Leased equipment is automatically covered. Leased tools and machinery often require separate coverage under an inland marine policy. Number 6. Business interruption assumptions. Income loss is automatically covered. Standard property insurance won't cover lost income unless you have business interruption coverage. COVID-19-like shutdowns are covered. Many business owners assumed pandemic-related losses would be covered, only to find exclusions. Short-term interruptions are insignificant. Even a few days of halted operations can lead to major financial setbacks without proper coverage. Number 7. Farm and agricultural insurance assumptions. Hobby farms are covered under homeowners insurance. Without specific farm insurance, property and liability claims may be denied. Livestock are covered like other property. Standard policies often exclude injury, illness, or theft of animals without endorsements. Farm liability covers agritourism. Hosting events, farm tours, or U-Pick operations requires specialized liability coverage. Custom farming services are automatically covered. Operating machinery on another's land can lead to uninsured liability claims. Number 8. Life and health-related assumptions tied to P&C coverage. Health insurance will cover accident-related injuries. Without proper personal injury protection, PIP, or medical payments coverage, medical bills can pile up. Disability insurance is unnecessary. Many don't realize how quickly an injury can devastate their finances without income protection. Life insurance is separate from business needs. Buy-sell agreements funded by life insurance protect businesses if a partner passes unexpectedly. Number 9. General coverage assumptions. Premium price reflects coverage quality. Cheaper policies often exclude critical protections, while a slightly higher premium can save thousands during a claim. Insurance automatically adjusts to inflation. Without regular reviews, coverage limits may not reflect rising construction and replace costs. All risk means everything is covered. Even broad, all-risk policies have exclusions that can result in costly surprises. Policy lapses aren't a big deal. Even a short gap in coverage can lead to denied claims and higher future premiums. Number 10. Claims process assumptions. Filing a claim means automatic payout. Poor documentation, missed deadlines, and policy exclusions can result in denials. Pre-existing conditions are always covered. Damage that existed before the policy start date is typically excluded. Premiums won't rise after small claims. Even minor claims can lead to premium increases or policy cancellations. Key takeaway: don't let assumptions cost you everything. A simple, no-obligation policy review can uncover gaps that could destroy your financial stability. Understanding what you're actually covered for empowers you to make educated decisions, ensuring your insurance protects you, not just the insurance company's bottom line. Schedule your personalized policy review today and secure your future.